Marksman Capital presents.
Welcome to part 2, Powerful Bearish Candlesticks Combinations. And in the last part, we have actually covered 28 candlesticks formations. And of course, we don't have to remember all. And we just have to remember half of it or even less. Because what is more important is the concept and where it appears in the chart. And also in the previous part, I've also covered confluence with other technical factors. It's very important. In this instance, I would actually short or even take profit at this area on the right hand side top here where there was a previous resistance, and at the same time I would like to see huge flushes, sharp steep flushes up here before we even short at this area. Alright, so the shorting part will be normally after we have identified the formation of certain specific combinations of these candles. And let's say for this instance, there's a bearish kicker and there's a candle closing below the previous resistance. That means it has failed to break upwards, and there's an impending bearishness that will come. So this is what I would anticipate if these combinations happen. Alright, so now let's see that in real charts. Now, alright, as we have spoken, the technical confluence, or what some may call it convergence, is very important. And in this kind of charts, I would like to draw the line at the top part of this resistance. And this is where we see there's a breakout, and then later part it turns into what we call a shooting star. Now, technically, yes, we call it a shooting star, but what is the dynamic right here? And what we need to know, what's happening behind the curtains. And usually, yes, I don't use a lot of momentum indicators. In fact, most of the time I use pure price actions to determine, to actually make decisions in my trading or even investing. So right here, let me rewind a little bit. Now, what is happening right here? When you have a huge bullish candle that is forming right here on top of this resistance. And what we have learned earlier during the support and resistance chapter is that if the price breaks the resistance may become support. And this is where a lot of traders will also go long. Alright, so at the same time, I would not call, I would actually take away the shooting star description right here. And generally, I would call this a bull trap. So now what is a bull trap? So imagine in a bull trap is an effective method to take out short sellers' stop losses. Now that's number one. So that means the short sellers who saw this big red candle right here, which is failing to make higher highs, and there's some sort of bearishness here, and they come in, they short this at this area, which is highlighted in yellow. And also at the same time, they would place stop losses. And their stop losses are buy orders. So, and a bull trap attracts traders to chase the breakout. It induces high liquidity for smart money to take the other side of the trade. And in the markets, it's full of conflict of interest. So this is one of it. And at this area, this is where a lot of bullish traders, they come and chase this breakout candle. And this breakout candle is meant to take out the cluster of stop losses here, which is buy orders. And at the same time, retail traders who go long over here, they provide liquidity to the smart money, and the smart money may go short over here, or at the same time, they distribute, they take profit at this area in which they have long this asset class maybe have been a long time ago, and this is where they would like to distribute. Or at the same time, if there's a lot of liquidity, the smart money could actually short at this moment. So now The retail traders' stop losses are also sell orders. So when the smart money shorts, then it fails to break upwards and the price closes below the resistance. And this is where we can also short when there's a confirmation like this formation of the candle here where we call a shooting star. All right. So of course, what we see here will be bearishness that continues. So now let's go into another example where we can see here there's this combination right here and we call it a doji. All right, now let's look at this structure right here. And there's a resistance right here, and I would like to draw on top of this area. Right, I always want to draw on top of this area because I know there's a lot of stop losses here if short sellers would short at these areas. All right, so now there's a temporary breakout right here, which is also a bull trap, and a doji formation has actually formed, or we call it long-legged doji reversal candle. So this combination is also very powerful, and if we rewind a little bit, this is used in the downtrend. So in a chart, when we actually rewind a little bit, we can see there's a downtrend. But when do we short during a downtrend? We short when it is strengthening, giving us temporarily, a strengthening temporarily, giving us a chance to short at a higher price. So now let's fast forward, and here's another example where we can short after this candle has actually formed, but it's not immediately. We can only short where it closes below the resistance, and this is how it happened. All right, came up and it closes right here, and this next candle right here at this area is an area where we can short, or even this area right here. All right, so, and of course this is what we call a bearish ice cream, and some may argue that this is also a bearish engulfing candle because this red body here engulfs the previous candle range also as well. All right, so it could be either one, or we can call it both. So now here's also another example where we can see, now what is this candle combination right here? And this is a very good structure, and here we see a huge flush up and then the second huge flush up where it induces a lot of bullishness from these two flush ups. So where a lot of traders will start to chase the price. And this is what we call double marubozu. All right, I've been too quick. Double marubozu, which two identical candles body formed side by side. All right, and as we have remembered, this kind of candles, it forms a gravestone doji, and you will have a little wick right here. It could be even a slight small wick down here was formed. So nevertheless, this is also still a bearish pin bar because the significant part here still it's more than 70% of the entire candle range. All right, so right here at the top of this candle, we can see hanging man. All right, that's also bearish. And then right here, we can see dark cloud cover. Right, let's recognize even more of these candles. And at the top of these candles right here, we can see two combinations. All right, and of course, I always like to see flashes upwards before these candles form. All right, so there are two combinations right here. We can see double marubozu and long-legged doji. So this is double marubozu, and this formation right here is long-legged doji, and this is magnified right here for this part. All right, of course there are more of these candles. Let's remove that. And here's another one. Here is where we call, now this is an individual candle. We call it a bearish ice cream. And also at the same time, we want to see flushes upwards. And this is temporarily breaking one of these resistance right here, where it's also a bull trap. So these are bull traps. Bull traps, right? Like we explained earlier. All right, and again, remember the structure must have huge, sharp, steep rally, flushes upwards, and because the smart money, they will always want to sell at a high price. Short sellers always want to sell at a high price. So of course, these kind of structures, they also do attract seasonal traders that short at these areas. And they would be placing their stop losses around here. So there was another induce of bullishness right here, flushes upwards, and those stop losses were taken out. Offers a lot of liquidity for the smart money. So at the same time, so we can see a shooting star right here, which is very recognizable, and a long-legged doji reversal. Right, so now more caterpillar, dark cloud cover for the first combination. Then we have, all right, first and second combinations are dark cloud cover. And these are like signs of weakness. And whenever a stock, it doesn't just happen once, then it starts to go down from there. So it might happen a few more times depending on how much accumulation that the smart money has done. It takes multiple times for them to distribute their shares. So in this combination here, before the whole entire chart goes bearish, right? We have a tree inside down here, and also we have a bearish kicker over here. All right. So there are many combinations before it starts to go really bearish. And of course, there's also another combination right here where we call it a hanging man. All right. So, and here again, what we can see, huge flush up and another huge flush up and some huge flush up at this area. So positions that were built long ago and a lot needs and require a lot of these combinations for the smart money to distribute. And here's an example. So you can see weaknesses here. All right, that is the evening star, but it did not go down immediately. And there was a short squeeze right here. All right, so prices went up again and allows the market makers of smart money to distribute more. And here we have bearish meeting lines. And what do we call this? A dark cloud cover. All right, and here's more combination, a hanging man, which also forces this area. All right, it's a temporary breakout. It's a bull trap. So whenever we see these combinations right here, here, and these areas, those are temporary breakouts. Temporary breaking out from the resistance. All right, which traps the bullish traders. Here, more of this to see. The more combinations, the more charts you see, the more you'll be able to apply this. You have shooting star, and the shooting star, and this is a lot of shooting star here. Right here, there are like three shooting stars right here. Triple shooting star, and there's a lot for them to distribute before the price starts to really go downwards. All right, so, and also these are bull traps, and you can see huge flushes upwards before this happens. All right, and also as of this area, so this area also as well, bull traps. All right, because these are advanced levels that we are going in, and I will tend to be more critical in the price structure, the later part. All right, okay. So this is just a single bearish ice cream. So this is all the opportunity that you can see and where you can short in the charts. Right, of course there are more, one black crow, many combinations, and this is also where we can see in year 2018 or end of 2017, where Bitcoin has made sharp rallies, very sharp and steep, because there was a lot of euphoria, and this is a very steep rally, and in the first distribution it created a short squeeze upwards here, and of course there's a lot of distribution at this area, and here's redistribution before it goes even further down. And here, if we zoom in, there are a few candles combinations that we could see distinctively. And here are the candles that we can name them. These two combinations right here are long-legged doji. Yes, this one has failed. It has made a short squeeze upwards and it formed another one right here. And once it breaks downwards on these levels, all right, then we can see a lot of bearishness. And of course, so when positions were built up earlier before this pattern happens, there will be several times that the smart money would have to distribute, and we could see more of these patterns. And this is where we call this a hanging man. Right, of course, there are more here. You could see another one, what we call double marubuzo, before it starts to go further downwards. And the more you look at charts, and even if you're a beginner, the more you look at charts, the more these patterns will be, you'll be more familiar and literate on this, or seeing this kind of patterns in the charts. And it tells you where the strength comes in and where the weaknesses comes in, so that you can actually time and plan your trades properly. Okay, so now that's the end of this chapter, or this topic right here. I'd like to thank you for your time, and happy trading and investing. Striker X here, signing out. We're starting a new group for serious traders only. There will be callouts on open and closed trades. No discussions about markets or politics. No Facebook, Twitter reposts, so that you get notified trades only. There will be greater support and more personalized education. Subscription is US dollar $19.95 a month. So if you're interested, please DM me and we will add you on the waiting list. If you like this video, please hit the subscribe and like button, and also notification button if you like to get more of these videos. And we also have a Facebook group where we call Global Financial Markets Trading, and we will provide the link below in the description column.